Now in this video, I want to share my personal strategy with the stock market and what I plan to do with my investments during this 2020 election. We all know that the election typically drives a lot of volatility, so it's best to be prepared for this so we can take advantage of possible opportunities in great businesses that may present themselves over the next few weeks. My goal and my hope with this video is that by articulating all this information to you, that you get a lot more confidence with your investments, that you're able to navigate through this volatility and come out a big winner. That's kind of my hope with this, and I think that if you watch the video all the way through, you'll definitely gain some insight here as to my thinking, which could possibly help you with your investment career. Now just a quick note, if you could take a second, hit that like button down below, helps the channel out tremendously, helps push this video out to a lot more people, and truly do appreciate it. Okay, so the way I thought I'd structure out this video is kind of have a blend between data and my personal thoughts. So let's start off with the data, look at the data points, and then I'll share my thoughts. So I thought we'd start here, and this is a graph showing us how a dollar investment has grown over time depending on the candidate in office. Red is for Republican, blue is Democrats, and while this graph only goes to 2019, we have a good amount of data points here to gather some thoughts on. To me, the long-term picture says that regardless of who's in office, the S&P 500 continues to do its thing, and that is it continues increasing in value over time. One thing I did notice though is that more often than not, when we have a change of government, from red to blue or blue to red, the short-term performance of the S&P is relatively stagnant. In other words, there isn't much movement in the overall market in terms of upside or downside during these changes. This tends to only be a short-term observation though. The market seems to digest the information for a few months, maybe even a year, and then after that, we continue marching higher. So that's the first thing I noticed, and that just means that if Biden does win this election, there's a high probability based on past data that the market could just stagnate for the next few months, possibly the next year, and things just continue moving sideways. Now, I don't think that's really out of the realm of possibility because this year has been a great year in the market despite of everything going on around the world. So I don't think that a year where we're kind of flat or maybe even slightly down is out of the realm of possibility. But now here's the thing to understand. During elections, during, a term that a president serves, there are certain sectors that do well, there's certain types of equities that do well. So let's discuss that. We can see the last 4 presidents here and how different equities have performed. It's a lot of data at once, I know, but it's kind of a mixed bag here. However, the common thing I see is that US equities tend to do well in a blue government and emerging markets tend to do well in a red government. Of course though, guys, there are exceptions to this as we have seen in the last few years. In summary though, the general trends tend to be that if you're invested in US equities, you want a blue candidate running the show, but if you care more about emerging markets, Neo, Alibaba, Tencent, any of those Chinese companies that people seem to love, then you generally want a red candidate in office. But again, keep in mind, this is just past history, past data. It does not mean this is definitely what's going to happen this time around as well, so it's very important to understand that. Sure, there's a higher probability of things panning out the same based on stats, based on gathering information like we're looking at, but nothing out there in the markets is a guarantee, so just remember that, and that'll help you be a successful investor, I promise. Okay, so that's the data, I got that out of the way. Now let's discuss what my thoughts are with all of this. So if you don't know, I'm a long-term investor. No, I'm not just saying that like a lot of people do. I'm genuinely a long-term investor. When I buy a stock, I have no plans to sell it for a very long time. The only reasons that I would really sell out of a position is if my thinking or the fundamentals around that company has changed. So the outlook that I had on it initially has changed, management's changed, the way that they operate's changed, and I don't like it, I'll sell out. Or the other situation is if I need the cash for something else, maybe a large purchase or something. Those are 2 situations, guys, and that's it. I'm not going to sell out of a stock just because I'm down on a position when the company's fundamentals have not changed. In fact, I use those opportunities to buy more, average down my cost basis, and eventually realize those massive gains. Now, there has been situations in the past where I have bought stocks with a very short term, and honestly, I don't really enjoy doing that. I do it sometimes when I see a really good opportunity, but more often than not, I'm a long-term investor. I'm more comfortable long-term investing, and I stick to businesses that I believe in for many, many years to come. Now, here's the year-to-date chart in the S&P, and we know on average the S&P increases around 7% in value after inflation annually. So we're pretty close to that figure here again in 2020, despite everything going on in the market around the world. But despite the market being this high and pretty much pushing new all-time highs, there are still a few opportunities here and there. Here's an example. Is 3M stock down 33% off of its highs. Now, does this mean that it's a bad stock to own or a bad business? I don't think so. I think it's a great business and is an incredible buying opportunity in a world-class company. Oh, you want another stock? Sure. Here's Raytheon RTX, down 37% off of its highs thanks to the broader issue with the aerospace industry. Is Raytheon going out of business? I don't think so, guys, but the market has clearly priced in some big downside in this stock, and as a long-term investor, guess what? This presents a buying opportunity. So what am I trying to get at here? I'm trying to get across to you? Well, just remember, whether the market's at an all-time high or it's declining or whatever, individual stocks will always provide opportunities. That's why we individually stock pick on this channel. The market's at all-time highs. That does not mean every stock is at all-time highs. I just showed you two examples of great businesses that are down over 30% from their highs. So there's opportunity out there if you look. Now, what's interesting, guys, is that we're about to enter the biggest week in this earnings season with massive tech companies reporting this week. This is definitely going to add a bit of volatility in the markets. We could see, depending on how these companies do, either some big downside or some big upside. And to take advantage of that, you got to be ready for this. Set some cash aside, create a watch list, and just wait. Patience is key. Wait for your opportunity. When you see that opportunity in a business you understand, you believe in, buy. Just buy. That's what I do. I just buy in as much as I can, average in over the next few weeks as the stock continues going lower or stays at those low prices, and then just hold. It's as simple as that. I personally use TradingView. You can check out the description down below if you want to check them out. It's free to use their service. You can pay for it if you want to. This is not a sponsored video, but description down below to check TradingView out. And what I do on there is I create separate watch lists, and I create, high growth stocks watch lists, my regular watch list, my portfolio watch list, all that kind of stuff. And on a daily basis, I'll sort by companies that are down, companies that are up, kind of get an idea of where the general feel of the market is and look to see if there's any opportunities out there. Plenty of times there's going to be stocks that you aren't monitoring very closely that has a significant dip, and then you notice that because of your watch list. So creating a watch list, extremely important. Now, what you also want to do is keep a good amount of cash on the sidelines, guys, because you don't want to miss that chance. Intel, Kimberly-Clark, Fastly, these are three businesses that I've noticed that dipped quite significantly over the past week. And if you understood these businesses, you believed you were long-term bulls in them, these are possible buying opportunities. And if you don't have cash, you can't take advantage of it. So always have at least 20% or so cash. That's kind of what I do in your account so that when that opportunity arises, buy. And so far, this has been kind of a winning strategy for me. So what I've been doing is what I did in March, what I've done in previous dips. And it's been working really well for me and those of us in the VIP group. Bottom line, kind of concluding this video here, what I want to get across to you is just ignore the noise. Election year, volatility, global issue, a lot of stuff. There's always going to be something going on. Focus on those incredible businesses that you have high conviction in, and chances are you're going to be very happy that you did. Now, I know I've been getting some questions on whether I think the market's going to see the same lows that we did in March, like a double dip here. I don't think that's going to happen. I think it's very unlikely. And the reason is because back in March, there was so much uncertainty. It was like, what's going to happen with these lockdowns? We don't know what we're going to do. How are businesses going to perform? Are people going to be outside again? Are people going to be spending money again? So many questions left unanswered. But now, even if you go back into a lockdown, we kind of know what the outcome is going to be because we just went through that. So I don't think there's going to be a massive sell-off like this. Definitely, we could see some selling because businesses' earnings are going to get affected if lockdowns are put in place again. But if you're sitting on the sidelines waiting for those March lows, good luck. So guys, I know I've been creating a lot of these kind of lessons, mindset videos on investing lately. Haven't been doing too well on the channel, but I know for those of you watching, you're getting a ton of value out of it. So I truly do appreciate you sticking around all the way to the end. And if you're still here watching, let me know in the comment section down below your #1 stock that you want to buy during this earnings season. Love to hear your thoughts, guys, as always. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.